Imagine waking up tomorrow and seeing one shocking headline everywhere. Gold didn't just rise, it exploded, breaking records, shaking markets, and forcing investors to ask one urgent question: is this just the beginning, or are we already too late? Because if gold really crosses $3,000 in 2026, it won't just be a number, it will be a signal that something much bigger is happening in the global economy, something that could affect your money, your future, and even your daily life. And today, on the Gold Report, we're going to break this down in the simplest way possible so you can understand exactly what's coming next. Before we go deeper, if you want to stay ahead of market moves like this and understand where smart money is going, make sure you hit like and subscribe right now, because on the Gold Report, we bring you insights that most people only realize when it's already too late. Now let's talk about what's really happening. Gold is not just another asset, it's fear in physical form. Whenever investors feel uncertainty, they run toward gold. And right now, uncertainty is everywhere. Inflation is still a problem. Global tensions are rising. Central banks are making unpredictable moves, and the trust in traditional currencies is slowly weakening. This combination is exactly what creates explosive moves in gold. Think about this. In the past, every major gold rally was triggered by a crisis. During the 2008 financial crash, gold surged. During the pandemic, gold surged again. And now in 2026, we're seeing something even more dangerous. Not one crisis, but multiple slow-burning crises happening at the same time. And that's why many analysts are quietly predicting something huge. But here's the part most people don't understand. Gold doesn't move randomly. It moves in cycles, long periods of silence followed by sudden explosive rallies. And right now, we're at the edge of one of those explosive phases, the kind where prices don't just climb, they jump. Let's break it down simply. For gold to reach $3,000, three major things usually need to happen: rising inflation, weakening dollar, and increasing global fear. And right now, all three are aligning at the same time. Inflation is still above comfort levels. The US dollar is facing pressure from global shifts, and geopolitical tensions are not calming down anytime soon. Now imagine this scenario. Central banks continue printing money, governments increase spending, and investors start losing confidence in paper assets. Where does that money go? It moves into hard assets. And gold is the king of them all. This is exactly what we are starting to see. All right? And here's something even more interesting. Central banks themselves are buying gold at record levels. Think about that. The same institutions that control currencies are quietly moving into gold. They're not doing this randomly. They're preparing. And when the biggest players in the world start positioning like this, it's usually a signal. Now, you might be thinking, if this is so obvious, why hasn't gold already crossed 3,000? And that's a fair question, because markets don't move in straight lines. They move in waves. Sometimes they pull back. Sometimes they pause. And these pauses often confuse retail investors, making them think the move is over, when in reality, it's just getting started. This is where patience becomes powerful. The biggest gains in gold usually come when people lose interest, when headlines disappear, when the excitement fades, and then suddenly, boom, the move happens, fast and aggressive. Let's talk about timing. Could gold hit 3,000 in 2026? Yes, it's possible, but not guaranteed. Markets depend on triggers, and the biggest trigger right now is monetary policy. If interest rates start falling, gold gets stronger, because lower rates reduce the opportunity cost of holding gold, and that's when investors rush in. Another key factor is the US dollar. Gold and dollar usually move in opposite directions. If the dollar weakens, gold becomes cheaper for international buyers, increasing demand and pushing prices higher. And right now, there are signs that the dollar might not stay as strong as before. But here's where things get serious. What if gold doesn't just reach 3,000? What if it overshoots? Because in extreme scenarios, markets don't stop at logical levels. They go beyond, driven by panic, fear, and momentum. And that's exactly what makes gold so unpredictable, but also so powerful. Now let's bring this closer to you. What does this actually mean for you as a viewer? It means you need to start paying attention, not reacting late, not chasing headlines, but understanding the trend early, because by the time gold hits 3,000, the opportunity might already be gone for easy gains. Smart investors don't wait for confirmation. They prepare before the move becomes obvious. They watch signals, not headlines, and they position themselves when others are still confused. And here's something most people ignore. Gold is not just about profit, it's about protection. It protects your purchasing power, your savings, your future, especially in uncertain times. And that's why it has survived for thousands of years. But don't make the mistake of thinking gold only goes up. It doesn't. There are pullbacks, corrections, and periods of slow movement. And those are the moments that test patience, but they also create opportunity. So the real question is not just will gold hit 3,000, The real question is, will you be ready if it does? Because opportunities like this don't come every year. They come once in a cycle. And when they come, they reward those who are prepared. As we move forward in 2026, keep watching the signals, interest rates, inflation, central bank actions, and global tensions. These are the drivers, not social media hype, not random predictions. And if you want to stay ahead of these moves, keep following the gold report, because we break things down in a way that actually helps you understand what's happening, not just what's trending. Now, I want to hear from you. Do you think gold will really cross 3,000 in 2026, or is this just hype? Drop your opinion in the comments, because your perspective matters and it helps create better discussions for everyone watching. And if you found this breakdown useful, don't forget to share this video with someone who's interested in gold or investing, because the more people understand these moves early, the better decisions they can make. Because in the end, it's not about predicting the future perfectly. It's about being prepared when the opportunity shows up.